No doubt about it. I mean, unemployment to, I think, every trader down here, that is the most important number. I mean, we hear CPI, PPI, you get auto sales, you get everything else. But at the end of the day, in a nation that's powered by consumer spending, 70% of this country is powered by consumer spending, it comes down to jobs. I mean, jobs is the bottom line. And that's something that there's no silver bullet for. There really isn't. So, I mean, the president's going to have this speech in September. And I hope it's a positive speech. We'd like to see that. But at the end of the day, we're just concerned that there's no quick answer to the job problem. They had telegraphed this, and they had said a month before that they were probably going to downgrade America if they didn't get the $4 trillion cuts. We didn't get it. So for us here on the floor and other traders in the business, it was no shock. So, I mean, to even assume that someone had inside information when they had telegraphed this a month ahead of time is, we think, a little bit of a stretch, and it probably just goes to some PR to maybe tarnish S&P. But, again, that's more politics than anything else, so we don't put too much credence in it. But I can guarantee you the volatility that we're seeing is probably going to stay with us for years, because the markets are we're such a global world now. We're so tied into everything. When I first started here, you get the news at like 6 o'clock at night. Now we get it instantly. We know what's going on in Germany and China. We know real time, and it moves these markets so quickly. And everything, all this computer programming is so tied in. I mean, the dollar's tied into the euro, which is tied into oil prices, which is tied into equities. It's just one big program here that moves the market so rapidly that volatility is probably here to stay.